Welcome back to Chairman's Briefing. I'm your host, Rachel Lee. Now, this episode is brought to you by Rakovina Therapeutics. Let's get started. Investors took a beating this week as markets plunged over growing trade tensions. Monday hit hard with the Dow Jones dropping a massive 900 points, while the S&P 500 fell 2.7%. Tech companies felt the worst pain, with the Nasdaq 100 nosediving 3.8%. The market nightmare seemed to continue on Tuesday following Donald Trump's announcement to double tariffs on Canadian steel and aluminum. Stocks swung wildly throughout the day, at one point falling so far that market experts warned of a serious market downturn. The Dow lost another 478 points by the closing bell. Now, the real-world impact became clear when Delta Airlines stock crashed 7.3% after the company sounded the alarm that fewer people are booking flights. Now, a few bright spots emerged. Tesla shares jumped 3.8% and Nvidia rose 1.7%. Market watchers are cautioning that ongoing trade fights could freeze spending by both businesses and consumers, putting economic growth at risk. And this is despite healthy job numbers. Citi analysts have changed their stance by cutting their outlook on U.S. stocks from their top pick to just average, following the recent market plunge. The banking giant has warned that America's economic momentum might not outpace the rest of the world in the coming months. Two warning signs have prompted their decision. The market dropped below a key level that has historically signaled trouble, while even the biggest and strongest stocks have started to show weakness. Citi Bank have also stepped back from riskier U.S. company debt in the same move. In a surprising turn, Citi has upgraded Chinese stocks to their buy list. The bank now expects China's economy to grow faster at 4.7% this year, partly thanks to their increased investment in artificial intelligence. Analysts have noted that Chinese tech stocks remain bargain priced compared to similar companies worldwide, even after recent price increases. Citi have suggested that U.S. stocks might regain favor when AI developments return to center stage, but for now, they see better opportunities in international markets. Rakovina Therapeutics have just hit a major milestone in its fight against cancer. The company has successfully created compounds identified using AI models, targeting crucial ways that cancer cells repair damage. These new compounds block ATR, which is a vital repair system that cancer cells need to survive, and are designed to potentially treat brain metastases where options are limited. Led by top industry experts, Rakovina is targeting a market that's expected to reach $18 billion by 2030, using technology that finds promising treatments much faster than traditional methods. Gold prices climbed this week as escalating trade tensions pushed investors towards safe havens. The U.S. dollar weakened to its lowest point in 4 months, making gold less expensive for buyers using foreign currencies and boosting international demand. Investors watched closely as key inflation reports arrived, with potential to reshape Federal Reserve policy. Now, lower inflation numbers could speed up interest rate cuts, giving gold prices their next big push upward in coming weeks. Trade policy uncertainty continues to create market jitters. Treasury Secretary Scott Bessent has called the current situation a detox period following spending cuts, adding to gold's appeal as a safety net. Gold currently trades above $2,900 per ounce with strong technical support. Market experts remain positive on gold unless surprise inflation forces the Fed to keep rates higher longer than expected. The metal has maintained its upward trend since January, supported by its 50-day moving average price of $2,811. China continued its gold buying program for the fourth straight month in February, adding to national reserves amid rising global tensions. Now, the steady accumulation by the Chinese central bank provides crucial support for gold prices. China resumed its gold purchases last November following a brief pause, coinciding with escalating trade tensions with the United States. John Ciampaglia, who is CEO of Sprott Asset Management, told Kitco News recently that central banks are not only accumulating, but, quote, repatriating gold from the United States, from the UK, back to their central banks. Ciampaglia also weighed in on the speculation and potential controversy surrounding the pending gold audit at Fort Knox, suggesting that the more pressing question is who has the title of the gold, raising concerns about how much of the metal might have been leased, swapped, or pledged. Venezuela saw its gold reserves drop 13% in 2024, according to the country's central bank data. The decline stands in stark contrast to the global trend of central banks actively building gold reserves. The drawdown suggests that Venezuela faces persistent fiscal pressures, requiring the nation to convert hard assets into more immediately usable funds. The Bank of Canada reduced its key interest rate to 2.75% on Wednesday, marking a 25-point cut as trading tensions with the United States put increasing pressure on the Canadian economy. Central bank officials notably avoided using the word recession in their statements. When pressed about recession possibilities, Deputy Governor Carolyn Rogers maintained a careful stance, admitting that the bank lacks a formal forecast. BMO's chief economist, Douglas Porter, expects that this marks the beginning of a longer easing cycle. Porter predicts 3 more quarter-point cuts in coming months, potentially bringing rates down to 2%. Quote, Canada will face serious tariffs for an extended period. He suggests as well that growth concerns will ultimately outweigh inflation worries. The Bank of Canada meets next on April 16th, when it will release its quarterly economic assessment detailing the full impact of these escalating trade challenges. Junior mining stocks displayed remarkable resilience this week, with the GDXJ recovering Monday's losses faster than major U.S. indexes, which continue to fluctuate around flat territory. Technical analysts point to constructive price patterns as the small cap mining index approaches multi-year highs on weekly charts. Both major mining indexes, the GDX for larger producers and GDXJ for the juniors, bounced back strongly while the broader market searched for direction. Investment experts note that when mining stocks show this kind of strength and market uncertainty, it often signals a coming surge in mining share prices. Meridian Mining delivered a standout performance this week after releasing impressive economic figures for its Cabajal gold-copper-silver project in Brazil. The pre-feasibility study revealed a $984 million after-tax value and a 61.2% rate of return. The market responded with enthusiasm, sending Meridian shares sharply higher. The project requires $248 million in initial capital and will produce 141,000 gold equivalent ounces on an annual basis over its mine life, with stronger production of about 178,000 ounces in the first 5 years. Current reserves stand at 41.7 million tons, with 89% in the highest confidence category. CEO Gilbert Clark called this study a game changer, noting that current metal prices would boost the project value to nearly $1.5 billion. The company plans to expand processing capacity to 4.5 million tons by year 4. The Australian Securities Exchange is experiencing a surge of Canadian mining companies seeking dual listings. The trend accelerated after Capstone Copper listed in February, prompting 4 more Canadian firms to initiate the process. Now, market experts are citing Australia's sophisticated resource investor base as the key attraction. The ASX ranks first globally in mining company capital raising, offering better valuations when Canadian markets have struggled to support resource companies. The trend extends beyond Canadian companies, with London-listed firms like Greatland Gold and Sol Gold also pursuing Australian listings as mining companies seek more supportive markets. And that's your briefing for this week. Leave us a comment. We read every single one, and we'll see you next week. I'm your host, Rachel Lee.